Hello. This is just a really quick overview of the trade that I took yesterday because I'm aware that it doesn't have any speech in it. It's just only an example of an execution. Okay, so my premise for going long was because I thought this might be a mitigation block, you see, because we failed to make a lower low. And then because we keep failing to make these lower lows, it's also low resistance liquidity run conditions. Okay, so I thought we were going to come out of this mitigation block in low resistance conditions. So we might have had like just a really small run back down into below the mitigation block and then out through the top again and continue higher. But I was wrong about that. Okay, my entry was actually great. I'm not going to lie. My entry was down here. I entered on this down close candle right there. So wait, I'll show you where I entered. It was here. That was my entry right there. Okay, so the reason that I entered long is because I saw this looks like a balanced price range, and then you're using the inversion aspect of the imbalance of sorry, you're using the inversion aspect of the volume imbalance, which is part of this balanced price range. Okay, and then I was also using this as an inversion fair value gap, and then I put this arrow on here to signify that I want this to go higher. Okay, it did end up trading higher. And so this was the move that Price had offered me. To be honest, this is more than enough. Like, and if I wasn't out by this point, after Price coming back into all of these PD arrays up here, these purple zones, then that's my fault for still being in. Okay, because I should have taken profits up here in that trade. So this isn't a mitigation block, so I can see now how it isn't. But I'm just gonna remove those. So the reason I thought it was a mitigation block is because we basically traded lower after making an original low. Wait, that doesn't make any sense. So we made this low here, okay, and then we traded higher, and then we traded lower once more, but it failed to get below the original low, and then it started trading higher. So from here, you would want to see the market structure shift, okay, which did happen, and then price traded out of it a little bit, and then it just fell through. But what I would have anticipated to see is for price to come out of it, come back in, and then continue higher. So that's not what happened in this case. But my trade was actually quite good. Like obviously, I was running this trade for around 50 minutes, something like that. It was 50 minutes on the dot. That's how long I was in profit for, and then it took them 7 minutes to hit my stop loss. So the trade was less than an hour all around. Okay, whatever. This one is actually a mitigation block. That is a mitigation block because price trades higher, then we trade lower, and then we trade higher again, but we fail to break this high. So for one, that's low resistance. Okay. And it's a mitigation block because when we traded back down below it, we had a market structure shift, and then price came back up a little bit and allowed the buyers to offset and mitigate the losses that they occurred when price started trading lower here. Okay, so I think like everyone buying here, they're making profit, and then when the market dumps, this run back up confirms this area as a mitigation block, and then every single one of these is now a statistical leg that price uses to keep going lower. So it's like it keeps allowing you to mitigate your losses as it's trading lower. Okay, so like say that I was buying here, it goes into a bit of profit, and then I'm in a loss. Okay, and then when it goes back up, I can close my losing position. And then if I'm buying here, it goes up a little bit, and I come back into a loss. When it goes up here, I can close my losing position. And so it's about like smart money mitigating losses, or basically like it's kind of like that, yeah. So I just wanted to give like a quick rundown and overview of what happened on my trade and what the market looks like now. What the fuck, bro? Um, so this is the day before. Okay, this is that day, yeah. And then this is the day before that. This is the day before that. And then that's as far as I can go back. There's also this here, and there's also some more back there, but I can't see them. So I've been trying to keep the daily levels within the span of the day, just for cleanness. And but to be honest, yeah, like if I had this fair value gap on like extended forward, then to be honest, I probably would have just anticipated the price falling into this. There's one more thing that I need to say quickly before I end this video, and that is the accumulation, manipulation, distribution aspect of Asia. So I'm going to delete this mitigation block because I don't want to look at it anymore. So Asia, okay, started at 7 until 9. So all of this box here represents Asia's kill zone, right? Okay, so you can see that we consolidated or accumulated in the first part of Asia, yeah, and then they manipulated the price, so they ran it higher so that they could get good prices to short. So we have accumulation, manipulation, distribution. So I'll show you that one more time. It looks like, oh, 1 sec. So we have accumulation, manipulation, and then distribution all the way down, all the way down here, and even further, in fact. Down. So this is a beautiful example of accumulation, manipulation, distribution. And that's all for today. I just wanted to do like a quick recap of my trade yesterday. Oh, that's not all for today. To be honest, I'll probably come back on and I'll do some analysis of today's price action. But I'll probably wait because I need to go have a shower in real life. But my trade yesterday was good though, right? I mean, if that's the only trade I was taking all week, to be honest. The entry was clean. The entry was very clean. Maybe it was a bit too clean. Right, anyway, I'm gonna go. Bye now. Bye.